agency live on real TV, on YouTube. But in any case, that's neither here nor there. Carlos, I know you want to ask me a bunch of questions, and I'm going to limit you to 5 questions today. But I think it's very important that a lot of people see this because I answer these questions on a daily basis with our clients, and I answer to try to make sure that they get quotes and policies and all of that good stuff. So I'm gonna shoot from the hip. If you don't like it, sorry, but it's just how I feel. All right.
That'll work.
All right. So I'm David Berry, TexasInsurancePro.com. My man Carlos has got a bunch of questions he wants to ask me. I'm going to shoot from the hip and just answer in the way I know. Now, you might be an insurance scientist or whatever the case is, but this is what we deal with on a daily basis in the field as we're dealing with as we speak to our clients. Or if you're shopping for insurance or something, you might come across these things and wonder, why is it they ask this or that? Well, one of the things we'll try to do is we'll try to broadcast this and answer a few questions. So if you have questions, feel free to submit them in the comments below, and I'll do my best to answer them. So Carlos, without further ado, I'm gonna turn it over to you and go ahead and ask me your first question.
All right, David. One of the questions is when you get a call, there's they want a quick quote.
A quick quote.
Fast and easy. And what's the big deal?
The big deal. I get frustrated personally when it comes to quick quotes, and the reason is because when with regards to commercial insurance, very rarely is a quick quote an accurate quote. And what I mean by that is that when you're dealing with personalized insurance as opposed to commercial insurance, you can sometimes manipulate the system to get an idea of what the rate is without doing things like insurance score or running claims, loss, or motor vehicle reports, as opposed to commercial insurance. On the commercial insurance side, one of the things I have to do is I have to make sure that I have all of the information regarding prior losses. We have to make sure that when the person asks for a quote or they get a quote, that the carrier will ensure that classification of business. So in other words, a trucker that does rock and sand and gravel, and then he also has a job as a professional liability. He's an insurance agent. It's hard to get an insurance company to do a professional liability quote and a trucking liability quote together. So therefore, you run into a situation where the insurance provider doesn't have an appetite for that. As a result, there's no match. And so the best thing to do is to find a match. And the way we do that is we ask all of the underwriting questions up front. We get, driving records, we get loss information, and also revenue generated, what have you. Now, the fact that we deal with a bunch of insurance companies means that each company may ask a different level or develop a different level of detail to generate that quote. And in the end, especially in business insurance, once we've completed the quote, it is more than just a quote. It's actually an offer to bind. It's an offer to insure that business the way we've entered it in. So the revenue that we put in, the revenue projections, the type of projects that they're going to do, the type of business that they're going to run, we actually are going to insure them the way they answered the questions. So when a person's calling around for quotes on business insurance, especially business insurance, you have to understand that we're going to ask a lot of questions. And in a lot of cases, as a matter of fact, these quotes are not even done in the office. We have to submit those to an underwriter who in turn negotiates with the carrier to make sure that we get the right quote with the right package and without exclusions that could affect your rate. So that's really the deal with the quick quote. I don't like to do or give someone a ballpark figure because I could be wrong. And then if I'm wrong, I'm held to that standard. Oh, well, you gave me this. Why did the rate change? Why did this happen? Why did that happen? Why did they exclude this peril, or why did they exclude that? So we stay away from quick quotes, and we actually ask underwriting information so that we can get the true story and submit that to the carrier and develop a good picture for that underwriter so that that underwriter can give us something that we can work with and that you, the consumer, can work with as well. Does that answer your question?
That answers it.
Feel like I'm on a reality show.
This is reality.
Okay. All right. Next.
So what about driving records and just regular car insurance, personal auto?
What about
How
it?
does that affect it? I mean,
Well, there are two sides to that. There are two sides to that one. And I feel very adamant. I'm very passionate about auto insurance because that's how I got to start my business. Way back in the day, before technology, we used to have to run what are called motor vehicle reports. Before they were real time, we had to order them and wait for them to come back. And so what happened was, in that time period, in that 3 days that it took for the motor vehicle report to come back, the rate could change. And so when I first started, we bind a policy based on what the customer gave us. And then we would wait for the underwriter to review the policy and review the driving record and review the claims history. And so, but then at that point, if anything changed, we had to go back and say, well, your rate changed. And it's because of all this new driving activity or this new information that we've developed. And then at that point, we'd have to try to sell them a higher premium. And you know as well as I do that it's harder to sell someone a higher premium after you've quoted one thing over one rate over the other. So what I like to do is I like to ask questions like this. Have you had any tickets or any accidents, regardless of fault, in the past 5 years? Have you had any claims in the past 5 years, regardless of what happened? Have you or any driver in the household been suspended or convicted of driving under the influence of drugs or alcohol or any other major convictions that we need to know about? Notice I'm asking these questions in a very open manner to allow them to answer the questions, because that gives me the ability to properly place it up front. So for instance, if the person says, well, I've been convicted of vehicular manslaughter. Well, with vehicular manslaughter, there are different carriers that will insure that. I don't want to put that person with Safeco or Travelers or our preferred companies. I want to put that one with more of a non-standard carrier. So we want to get as detailed information up front. Now, I will tell you, before we get off the phone with most of our preferred carriers, and most of our carriers in that case, we do run claims loss and motor vehicle reports to make sure that we don't have the problem on the backside. However, that's not always the case with the non-standard ones. You know the ones I'm talking about. $39 a month for your car insurance, coming here for $29, starting at $15 per car, those kind of things, those kind of agencies. If you go into an agency and it says $39 rates, then odds are they're going to run the motor vehicle report on the backside if they run it. So it helps us if you have an idea of what's on your driving record, what claims you've had. If you've had a clean driving record, no problem. If you've had some details, then let us know up front so that I can make sure and place you and price you properly, and that avoids problems on the backside. Did that answer your question?
Very well.
I'm sure I missed something. But
no, you've answered it.
Okay.
Here's another one.
Mm-hmm.
Why do you need my social security when asking for a quote?
Well, you don't necessarily need it all the time, but I know people ask that, and we ask that as a part of the underwriting process. And to put it simply, that's just one of the things that the Consumer Report uses to match your information to the data that's the data warehouse, the choice point report that may pull your motor vehicle report or claims report. This is very important, especially if there are juniors in the household, there are seniors or thirds in the household. If there are a bunch of fathers in the household and everybody has the same name, you know, Raul Reyes Jr., Raul Reyes III, Raul Reyes, you know, if you're that in that type of household, then it could cause problems. If dad's got a bad driving record and son doesn't, because son has a PhD, he just happens to live at home, then that could cause a problem. So in a case like that, we want to verify your driving record by pulling claims reports. We want to match the vehicle operators of all claims. And one of the things that the insurance companies do is they collect driver's license, social security numbers, and dates of birth. And so that when we're reconciling that, we can look at that and say, oh, this is not the right person. Or the software can look at it and say, oh, this is someone else, because we have the social, we have the date of birth. Now, we don't necessarily have to have the social in all cases. We just have to know that We just have to make sure that we have enough to get a good hit on the insurance score, a good hit on the claims report, so that there are no mistakes in the rate. So I guess in essence, we don't really need the social, but it's good practice to provide that information so that we can get a solid rate each and every time for the insurance carriers that use insurance score and claims loss reports and motor vehicle reports.
Very well put.
Okay. Yeah.
Here's another one that I come across. Homeowners insurance. You get a call and they want the actual cash value instead of replacement cost.
Well, one thing is I know people never really ask for just actual cash value. But what I do see, especially in Texas, where we have a big divergence of the type of properties, especially in a place like Dallas. One of the properties I reviewed today was built in 1937. And the problem that we run into is that the actual cash value of that property may only be $70,000, or they may only purchase it for $70,000. And when you're insured for actual cash value, that means you're insuring it for the cash that you put into it minus your deductible. And in that case, you may not be in a situation where you actually have a replacement cost policy. Now, you and your realtor may do a really good job at negotiating the rate down from $160,000 to insure it, or to purchase it down to say 70 or 80 or whatever the case is. But to rebuild that, I'm looking at the actual hammer and nail costs. So the insured to value is what we're looking at. We want to insure it at 100% replacement cost whenever possible. So in the case of this house built in 1937, an investor could come along and say, I just want cash value. They're not concerned about rebuilding the house. They're not concerned about replacing the roof. They're not concerned about anything else that goes along with it. They're just concerned about replacing their cash, the cash they put into the property. In that case, you strip the policy down, and then if something happens, as long as it pays them the note off, or as long as it pays me what I have into it, I'm fine with it. I'll just rebuild another property cash. But for a homeowner that wants the house replaced in case a tornado comes through, a good example of this is when I got a chance to visit a bunch of folks during the Lancaster tornadoes a couple of years ago. There were a lot of people on this one street that actually had actual cash value policies. So while they had 16 and 1,700 square foot homes, they called their insurance company. They had forced place actual cash value policies is what they had. And when it was all said and done, their homes were insured for $60,000, but the rebuild cost, the actual hammer and nail cost to haul the debris off, rebuild the house, was anywhere from $90 to $125 per square foot. So these people were underinsured. And so they had to cut a lot of corners. They had to wait for FEMA to come in and declare it a disaster area. They had to hope that there was grant money available for them to help them rebuild their homes, because they couldn't rebuild them because their policies were not replacement cost policies. And on the case of the 1937 property that I reviewed today, we were able to get him a replacement cost policy, but I had to make sure that the plumbing and the roof and the electrical and the house was in overall good condition, and that it was not something that was going to be a loss waiting to happen. But one really important thing about actual cash value versus replacement costs is that the insurance company will stipulate that you insured at 90 or 100% of their calculated replacement value. If not, then you're going to be put into a position that's called co-insurance. So which means that you're going to split any partial loss. So if say $100,000 house has a 1% deductible, it's $1,000 deductible in this case. The insured to value is $100,000, but you pay $60,000 for the property. So you're 40% short. In a case like this, you're in a situation that's called co-insurance. And what would happen is on a partial claim, say a roof, a $10,000 roof replacement, the co-insurance would depreciate it by taking that 40% plus your deductible from the amount of that partial loss. So, and there are a lot of properties that are insured like this. So in that case, that $10,000 loss with the 40% that it's short on the insurance value plus the deductible means that person is going to get about $5,000 for a $10,000 loss. So we try to stay away from situations like that. because most people don't realize that that's actually what's going on. So that's always the first thing we do, is to try to get a replacement cost try to get a replacement cost policy regardless of whether or not it's a new property or an old property or what have you, because it's a lot harder to explain someone who's in co-insurance or someone who has actual cash value at the time of a claim. It's a lot harder to handle that call versus one that says, okay, no problem, call the insurance company to file a claim. Any other questions for me?
And one more.
All right.
Commercial trucking and a bad driving record. How can we help them out?
Well, hope they have deep pockets, first of all. And one of the things about commercial trucking is that you're considered a professional driver. And what that means is that you shouldn't get stopped for little things like speeding, because you're hauling someone else's load. That cargo is insured. And as a result, if you demonstrate a habit of excessive speeding or having a bunch of wrecks, then the insurance company is going to ding you for it, because they feel like you might cause an accident. And so as a result, I don't even know how to answer that one. It's just
higher premium.
It's going to result in a higher premium. I'll give you an example of one of the guys we talked to earlier this week, or was it last week? I think it was last week. We had a trucking company that I think he had 2 or 3 tickets.
Abdi?
Let's not use names. We want to protect the innocent. But 2 or 3 tickets. He had some violations that that caused the truck to be shut down. There were a couple of very small accidents. As a result, the insurance company surcharged him for every single small accident out there. So while it's easy to get the rate and get it insured, you're going to get surcharged for any claim that you have. So my advice to a commercial auto person, a truck driver, or someone who has any type of fleet is to drive safely, do pre and post trip inspections, make sure that you keep good log records, and then also do a good job of maintaining your vehicle, because something as simple as being stopped on the side of the road, having a part going out on your vehicle could result in a claim being reported on your cab record or on your insurance record. Even though it only costs you a couple $100 to fix, the fact that you got towed away by the DOT could cost you thousands. I mean, thousands of dollars. In this case of the client that I'm referring to from last week, I think it cost him $8,000 a year to insure it. It would have been $7,000 versus $15,000. And these are 2 $600 claims. Any other questions?
No, that does it for now.
Okay.
But thank you anyway.
All right. Well, let's do this again some other time. If you have questions that you want to ask me regarding insurance, feel free to put them in the description below. Feel free to shoot me a message. I'm David Berry, TexasInsurancePro.com. Until the next time, you be safe and secure and have a great day.